and welcome to today's A-Team Group webinar on transforming data experiences in quantitative research and trading. My name's Sarah Underwood. I'm an editor here at A-Team Group, and I'll be moderating the webinar. Our expert speakers today are Anand Pandya, Global Head of Financial Services at Hakoda, James McKeon, Industry Principal Financial Services at Snowflake, and Richard Goldman, Global Head of Strategy and Execution, Quantitative Analytics and Data Science at Refinitiv, an LSEG business. Unfortunately, Guraj Singh Sangha can't be with us today. He's not well, but we have a great line of speakers, and I'm sure it's going to be a very interesting webinar. I'll ask the speakers to introduce themselves in just a moment, but first some advice for you watching the webinar. To the right of the video screen, you'll see a Slido section that includes a poll section. We'll be running 3 audience poll questions today, so do please take part in those so that we can gauge industry interest and where you're all at on this topic. And then there's another panel for questions. Please put your questions there whenever you'd like to. At some point, we'll gather them all up and answer as many as we can. So keep it going on an interactive basis. And I say we'll take questions when we can. That's it from me. And let me come over to our speakers. Anand, please introduce yourself and tell us a little bit about your interest here.
Yeah, thank you, Sarah. Anand Pandya, as mentioned, head of global head of financial services here at Hakoda. We're an elite Snowflake partner and systems integrator. I've been at this for about 20 some odd years. Spent the first half, really consulting Fortune 1000 companies in and around data analytics and really harnessing the power of data. And I've spent the last 10 years in industry as the head of operations and technology at Informa Financial Intelligence, which again covered 12 different brands across several industry subsectors across the globe, particularly in regards to quant and research, really looking at the EPFR brand prior to divestiture. So again, looking forward to chatting with the group and uncovering some key insights.
Excellent. Thank you very much. Over to you, James.
Thank you, Sarah, and appreciate everyone for joining. James McKeon here. Close to 30 years of industry expertise, mainly across front office sales and trading capacities at major banks, UBS, HSBC, RBS, amongst others. Time working at doing an analytics business called FX Transparency, doing execution analytics and transaction cost analysis on foreign exchange trades, and then working with Amazon and their capital markets business with data partners, as well as large technology providers. Here at Snowflake, working on trying to organize industry themes around use of data and obviously for true business purpose. And obviously looking forward to discussion today with the team here to really drill into the value proposition around how things can move forward and accelerate using the data cloud.
Okay, thank you. And Rich.
Thank you, Sarah, and thanks for having me on this panel. So I oversee the global sales strategy and execution for quantitative and data science businesses at the London Stock Exchange. Before joining LSEG, I had been on the buy side for 25 years as a quant analyst, portfolio manager, and COO of a incubation platform for hedge funds.
Okay, thank you, and thank you all. Let's get started with an audience poll. The question asks about your area of work. So while you decide what area of work you work in really, and sometimes it's not what you think, let me touch on recent events, and we'll see where we're going to go from there. If you remember, in 2022, it was a year in which indexing and other traditional investment strategies faltered, but quantitative investing offered a bright spot. Morgan Stanley said quantitative strategies posted a healthy positive total return of 3.9%, providing both diversification and capital appreciation in a difficult market and environment. Well, that was 22. Let's look forward, and let me come to James to talk about some of the trends that quant teams can be expected to address in 2023.
Thanks, Sarah. On a broad level, I think you hit it very well with regard to, if you think about the previous years leading into 2022, pre-pandemic, low interest rate environments, depressed volatility generally, obviously made a much more difficult environment for not just quantitative traders, but obviously people looking to speculate and create alpha. that level of risk has changed dramatically. And I think given the uncertainty we have seen in a post-pandemic environment, especially with the amount of money that's been put back into the market, both monetarily and from a fiscal point of view, it's created these massive distortions, which has allowed quantitative traders and others with a trend following bias and with volatility to create significant changes. The move in interest rates, without a doubt, roughly 450 basis points in less than a year, has created significant opportunity for the trading community to seize on that opportunity, right? Rarely have markets been trending in this type of fashion, and has created that alpha opportunity that I think many of the quantitative traders have seized upon. But it's also done without human bias, right? It's removing some of the emotion from the trading, which I think has allowed the opportunity to seize that and stay with trades longer than other people may have been able to from a pure discretionary standpoint.
Okay, Rich, what do you see coming up this year?
Well, following up on James' comments, I think risk has increasingly been the focus of many traders and investors, and using some of the quantitative tools to mitigate that risk, whether it's sentiment signals to look at possible controversies that are flaring up on individual names, or understanding macro changes and regime changes with regards to the interest rate and such. We're seeing a lot of interest in macro data and aggregate data, sector-wide data, to see how they can better position their individual security positions. I think the success of the quant investors over the past year has been a very disciplined risk approach that they've been taking. And I think they're continuing to focus on that. From outside of the use cases, from a implementation and tools point of view, we're seeing accelerated use of machine learning for natural language processing, as well as for natural language processing on text, but also with structured data. And we're also seeing a real surge in the use of cloud, which I saw 10 years ago starting, but over the last few years has accelerated. And I know this is a Snowflake related call, and I don't want to seem like I'm advertising, but we're seeing a lot of demand for Snowflake and things like that, where they can have more access to their data across their organization. Okay,
that's great. Risk and data then, big things this year, perhaps. Okay, lovely. Let's see the results of that poll, if we may, and just see who's on here. Data scientists, others, investment technology, research, cloud strategy, trading operations, trading, mixture. Okay, let's keep going then. Lovely. And coming back to you, Rich, this webinar is titled Transforming Data Experiences in Quantitative Research and Trading. What is this data experience? How would you explain it?
Well, it's a vague term, obviously, but it starts with data discovery, understanding what content can help solve the problem that they're addressing. Going back to my example, when you're looking at risk, understanding that text can offer insight into sentiment and provide insight into how market behavior will be happening in the short term, that type of finding the right text, that's difficult. So data discovery is the first part of it. And then it goes into the data integration. Integrating different data sets has a whole host of problems with it, from concording across different identifier schema to making sure that various corporate actions and other activity is all adjusted at the right time, making sure that timeframes, something as simple as timeframes, can be very disturbing, because different data sets may be on Eastern Standard Time or Central Standard Time or Greenwich Mean Time. And then having a environment where you could do continuous testing, because the fade of signals is very quick. And so quants are continuously wanting to improve their models, build new models with new content set. And that requires a testing environment that's robust, but also sustainable. You can't just trial a content set and see if it works and then get rid of it. You want to have a continuous testing environment available.
Okay, that's lovely. James, what's your sort of interpretation of the data experience, and how would you add to what Rich has said?
Yeah, I think Rich nailed it quite well. And what I would add is, after the experience of running our own company doing execution analytics, right, all of that, the effort and the time that is put into beyond ingestion, but really the normalization and pulling together all the symbology, the schemas, and even reconciling things, having disparate data sets with both, even the time stamping, right? That type of quality level of control is crucial, right? First of all, finding gaps, whether it is creating a benchmark, the basis for the quality control around the information is the 100% paramount to any type of analysis. And I think one thing he touched on as well that I think is absolutely crucial, it's that as we do delve into more AI type of tools with OCR and NLP, what has to be crucial is the idea of the context that gets applied. So you can talk about news sentiment. What if something comes up with news sentiment that says it's negative? However, I'm short. That's actually positive to me. How are you actually interpreting those signals for input into the actual outcome to the model? So not get the wrong signal and take the wrong action based upon what the AI is showing you. So I think it's a combination of the data quality challenges, but then really taking the human interpretation to apply it for actual practical use.
Okay. And in your experience, what would you add there in terms of what the data experience might look like?
Yeah, no, I think what I won't do is just kind of repeat things because I think Rich and Jimmy kind of nailed it. But when you take a step back, data experience really it's effectively an environment where a user or consumer of the data can access things easily, can easily interpret them, and then utilize that information to make some sort of decision. When you look at it from a quant's chair, that experience has to be enabled ownership and creativity. I mean, these are the Doctor Stranges of the market. They have to be able to see all the multiverses and all the storylines and figure out what's the path to take, right? So to do that, the ability to trust the data you have, to test it, to back test it, to stress test it, to tweak it, to try these multiple hypotheses, to have that horsepower to recurse and to find multiple outcomes, it really does necessitate an experience where, to Jimmy's point, facts are facts, they're immutable. Truth is really about context. So from the standpoint of enabling facts that are trustable and truly immutable, and everybody agrees on said facts, so that truth can be extrapolated from it, I think that is the data experience that is being transformed as we speak.
Okay, that's great. And then I'm staying with you, and we have covered some of this, but let's sort of take it out of the previous question. Why is that data experience critical for quant teams across banking? I think we've touched on it in some respects, but if you were asked, just that question, what would your answer be?
Yeah, I think, when you look at the technology is new, the role is not, right? The quant chair has gone from very much of an understanding of calculus and linear algebra and modeling diffs with probability and stats has pivoted itself to really now a quant has to understand MATLAB and R and Java and Python and SQL. And all of that is directly correlated to what we were talking about. There's this explosion of data and the velocity and the volatility of said data in context of the market. So when you look at the criticality of a robust data experience, it really comes back to an industry and market where, the hummingbird effect reigns supreme, and that experience of the data usage and the data modeling and the capabilities around it has to match the ease, the speed, the scale, and the accuracy to blend all of the math that the chair was built upon into the technology that meets the speed it needs to move. So I think that's why that data experience being robust and capable is absolutely tantamount to success in the chair.
Okay, that's great. Thank you, James. What would you say there in terms of why?
Yeah, and I can't argue with anything that Anand said. I think we are in a new era of risk, right? So not just from the basis that interest rates have changed, that is obviously the leading indicator into it, but for the last 15 years, the belief that not just that money was free, but the ability to take risk almost on an unlimited basis has been completely set on its head, especially what we've seen in the last recent days and weeks around people who are holding treasuries and obviously having to sell those treasuries, not hold them to maturity and realize a loss straight away has now obviously it's changing conventional wisdom around how risk should be managed. So I think putting that into a quant framework when many things in a traditional sense don't make sense has to be a significant challenge, right? So the discipline that I think many quant models will have to be is recognize that while they can obviously seize the opportunity with all this new data and create alpha out of it, they also have to recognize when what they believe to be happening doesn't make sense and shut it off. I had the ability and the fortunate or unfortunate experience of being in working in Asia on a trading desk in 2001 when dealing with U.S. hedge funds during Asian hours right after September 11th happened. And I think part of the best models that worked were the ones that had extreme risk calculations and risk filters built in to not just blindly follow the models when things did not make sense, right? When uncertainty prevails and traditional market correlations break down, quant systems that have those risk filters are absolutely the ones that will have the advantage, knowing when to actually turn off the model based upon proper risk filtering, just given the new level of the significant rate of change and the new era of risk that we're in now.
Okay, that was great. Thank you. Let's take a quick break for another audience poll question. The question this time is, what data issues must quant teams at your organization address in 2023? So while you answer that question, and you can tick as many boxes as are appropriate to your organization, let me come back to Rich to talk about the pain points and challenges he sees organizations facing when they're implementing quantitative research and post-trade execution analysis workflows.
So we touched upon the integration of data and the challenges there, which involves mapping across symbiologies and things like that. But when you're looking at historical data, you need to look at this over that whole time frame. If one data set's using QSIPs, another one's using CDOLs or ISINs or tickers, you need to be cognizant that these signals change over time. And if you're using a ticker C, today that stands for Citigroup, but 10 years ago, 15 years ago, that was Chrysler. You need to have historical mapping across all the symbology. And it sounds obvious, but having accurate history is important because data is the fuel for the quant engine. And if you have biases inherent in the data, whether it's look-ahead bias or survivorship bias, it can be quite impactful. And models that look great in back tests will fail in the real world because you don't have the advantage of a crystal ball if you have inherent look-ahead bias in your data. Simple things like companies report earnings. If it's a December 31st annual earnings, they don't report it on January 1st. They report it at the end of January. So if you're building a model and you have that fourth quarter number in January's tests, it's going to result in a crystal ball effect. You know ahead in the back test what the earnings are going to be. But obviously, we don't have that advantage in real life. Another pain point is metadata. We talked about the increasing use of text. Text is probably the most powerful alternative data source that's out there. But there's a lot of text when you're looking at news, social media, transcripts, filings. And so finding the needle in that haystack is a real challenge. Having good metadata that extends across all of the different textual data sets is a big pain point. It's not easy to do. Another one would be, well, let me stop there.
Okay. And do you have another one, pain points around quant research and post-trade execution analysis workflows?
Yeah, no, I think Rich started to touch on a lot of it, and that is, or I guess it comes back to the asks of data have superseded technology's ability to meet those asks more often than not. So the pain point is that, you know, the quants and the departments needing to ultimately do their analyses are dependent on, more often than not, commoditized technology teams who can't meet those needs. So it's how do they find either ways around it, and they create these fracture points, shadow IT, where you start to question data and you start to lack any inherent governance around it. So you start to create silos, which that silo effect feeds itself and slows things down, which is kind of one of the worst drag points that can happen. And then it, again, just chips away at that foundational trust in the data. So I think moving from a very chaotic state where you have Excel running the show, and you have people running CSVs and Excels off of their laptops and bringing that to bringing that to the forefront of the answers, and ultimately that crapping out either from an Excel limitation, memory limitation, whatever it might be. It's how do you start to feed more of an order from that chaos that leads to more of the insights that need to be robustly determined. That is kind of the inherent pain points and the challenge of the speed with which data has been created, the velocity with which data is needing to be interpreted, and the lag of where, more often than not, where technology teams are trying to respond at pace.
Okay, that's great. James, as a vendor, what would you add there?
The V problem of data, volume, variety, and velocity, right? So those the V3 argument persists. What I get most concerned about is the veracity piece, right? How do we actually assess not just the quality of what we're seeing from what we know to be factual information and putting it together the way Rich has described, the way Anand has described, but actually if we were using news sentiment, right? Where is that generated from, right? Because I think what's the analysis now? If you receive something that gets forwarded to you from a friend, the trust meter goes up to around 80 to 85 to 90%. But the question is the basis of the quality of the information and the veracity of it from the first place. That's the difficult challenge, I believe, that we sit today, irrespective of the architecture, irrespective of the system. And again, it's more existential, but I think it's something that has to be thought about today as part of this entire process with data experience, the architecture from which to manage this whole process from end to end. But then how do we then come up with the quality to eliminate bias, but also understand the veracity of what we're dealing with? So.
Okay.
And if I could actually,
yes, sure.
if I can actually extend on that, because we've had this conversation with clients. How do you trust what you're getting if you're looking at social media for sentiment? They often question that. And one of the responses I got was actually very interesting, which is, do I care if it's accurate, if the market's going to move on that social media sentiment? So it becomes almost the chicken and the egg. You want to make sure you know the facts, but sentiment isn't always based on facts. So in some instances, it may not be as important to understand what's accurate unless you're looking at what's accurately capturing the market sentiment. So it does get very thought-provoking at one point.
Yeah. And if we look at the First Republic trading yesterday and today, 60% move lower with a 40% move higher today. This type of volatility it's unprecedented. So quite interesting.
Tough task for anybody in this area at the moment. Indeed, yeah. Let's see the results of that poll, if we may. And Anand, would you like to cope on that? This is how our audience is seeing things that they are, the data issues that they're challenged by. Would you say that's representative? What would you think?
Yeah, I think that reinforces what all three of us said, that quality and trust in the data underpins everything else that matters. If you don't trust what you're working with, if the material it's kind of comes back to that, the facts have to be immutable. The truth is where the context gets applied. And so from that standpoint, it's not surprising that data quality is the piece that is chipped away at the most, just because people get frustrated by a lack of response, or that data experience not being, for lack of any other term here, easy. And so they start to create their own silos of information which don't match each other. So I won't say it's good to see this. You never want to see this being the issue. But I think when we look at where modern technology and modern data technologies and platforms are targeted, and what modernization and transformation, all the buzzwords you want to look at today, what they're seeking to address, I think looking at quality, access, and consistency are those top three components. So not too surprised here. I think it reinforces everything, Rich, Jimmy, and I have said. And I think it's about how do we pivot to ultimately address that concern.
Okay, great.
When it comes to data quality, there's different elements of data quality. One is the obvious. If a company had an earnings announcement, is the EPS accurately captured? That's straightforward and can be easily checked. The more elusive data quality issues are these biases that are inherent in a lot of historical data sets. Survivorship bias is very powerful. companies that have been delisted need to be retained if you're looking at building a model on historical data. You can't easily test that unless you're aware that that exists. Same thing with the forward-looking bias, which I touched on before. We did an analysis last year, and there's been 1 million restatements by companies globally over the last 10 years on their earnings. And this is going to always exist because they come up with their preliminary earnings, put out a press release, then they come out with their final results, which they file with the regulators, but then they could file a restated earnings later, up years later, if they adjust how they account for various FASB rulings or whatever. So all of those factors lead to many restatements. And if you have an historical database which doesn't capture all of those restatements and just overwrites the data, well, then you're going to have a significant forward-looking bias in the database. So retaining all of the restated data with when it was restated so that you know what was known at the time in the marketplace, so you can actually capture the price impact of any event. Because if you override it, you lose all of that valuable information and end up with overly optimistic models.
Okay, thank you both very much for that. And staying with you, Rich, which workflows do you think are most ripe for transformation? And we've talked about modernization and change and so on. What needs to change here?
Well, I think Adnan touched upon it with the word siloed. There's a lot of data that's siloed in different areas. I think this is where the cloud and migration to the cloud allow sharing of data across the organization and allowing that data to be integrated with third-party data, whether from us or some other vendor. So de-siloing the data is the first thing. And then finding alternative sources of data and making sure that they're these orthogonal, uncorrelated data sets are available, and finding processes for identifying those data sets is increasingly being important.
Okay, that's great. Anybody like to add to that? Okay, we'll move on. Actually, we'll move on and let's run a final poll question. This one is, what tools or capabilities do you think have the biggest impact on quant workflows? So while you have a think about that and place your votes, and once again, you can tick as many boxes as are appropriate, let me come back to James to talk about what technology and data leaders need to think about when they implement next generation quant workflows.
Yeah, thanks, Sarah. Despite working for a technology company, and let's be quite clear, with the cost of capital being what it is now, it isn't, ingesting big data sets and performing lots of modeling on it, it all costs something, right? There is an absolute, whether it's transforming from an on-premise situation to the cloud, these things obviously likely provide the scale and efficiency that is needed, but it also comes at a cost. So people have to think about it from typically around speed, right? Do you need sub-second data for what you're trying to accomplish? How often are you running that workload? Is it micro batch, or can it be done once or twice a day, right? So I think back to my time work doing transaction cost analysis work. Everybody loves the term real time. The question is, what does real time mean to the client, right? Real time could be every 15 minutes, right? Some people like to look at their analytics on a quarterly basis. Others want to look at it on a daily basis. So I think understanding costs relative to the output and giving how that pass works into people's efficiency and productivity to meet the end business goal, because the idea of going real time for the sake of real time can be extraordinarily expensive if that's not truly the mission and what's needed. So that's just one thing I want to throw back in there to the team here.
Okay. And what should people be looking for from your perspective?
So, yeah, I think Jimmy touched on a good element there. When people are asking for more or real-time data, it's more often than not because of how long it takes them to have to handle that data. So they know that by the time they finish their hour-long process, they want the next round of data to be available. It's very rarely that they actually need to know what's happening second to second. I mean, the whole idea of real-time and streaming was born from legacy Knox, where it was literally what's happening second by second from an outage perspective, not so much of a market perspective. So when you recontextualize what the need for data velocity really means, you start to look at it through a different lens. And now you're starting to say, how do we look at, and borrowing from Rich's comment around data sharing and third party, second party, external data sets, ultimately working at that intersection of unique data sets and solving for yet to be seen or current business problems. That's Eden for quants and data scientists. What it necessitates to get closer to Eden is ultimately the ability to easily use features for them to engineer and test new features and be able to operate quickly in response to data, not need data to react to them and their needs to process it. So I think when you flip that paradigm on its head and you start to bring process to data as opposed to data to process, that is that transformative flip that you start to look at from a technology and data leader perspective to balance cost, to balance enablement, and to reprioritize bang for buck in a delivery cycle.
Okay, that's great. Thank you.
Sarah,
Let's jump. Yes, of course.
Could I just jump back in one piece, because I think this is where, to further on Anand's point, is the idea that bringing in these, and both to Rich's point, to bring in both from the alternative data side, thinking of traditional economic data that actually informs federal, the FOMC decision-making on interest rates is lagged. The process could be done by surveys that could have error, right? We are moving in an economy where the rate of change is dramatic, right? You had a bank shut down in 48 hours, right? What I think is missing now is the ability to ingest this data in this leading indicator information that may come from credit card data or, much more closer to real-time information around credit creation will inform and create the alpha, right? That the quantitative, not just traders, but obviously the fund managers and the like are looking for it to inform their own decision-making. And it's just that quality of information with the speed of it is actually going to be what I'm trying to drive to, is that this is the new leading indicator information that's going to give people edge moving forward, both in their capital decisions for major corporations, but also within the investment community here on a quantitative basis. Because this is what's going to create edge while this gap exists. Over time, I'm sure it's going to have to be shrunk down, but there is a significant gap today between what is truly a leading indicator that comes from this data sets and alternative data sets versus what exists today in a fundamental economic realm that we deal with and these data lags.
Okay, that's interesting. Thank you. Let's have a look at those poll results now and look at the technologies that our audience is particularly interested in. James, would you like to comment on this one?
So let me take a peek. So, yeah, so, right. So no question. So I think the ability around the machine learning side, right? I think, what I think is most interesting is part of where we're seeing across the industry is that machine learning is be able to inform, faster decision-making process and automate, and so obviously create that productivity. But what has become most interesting and what we're hearing across the most clients, especially within a quant workflow, is the ability to share data seamlessly, right? Whether it's within their own walls or with other clients to meet these challenges and create competitive edge. I think, this is, the whole entire ecosystem of financial markets is predicated upon the movement of data. And I think what's becoming quite interesting is where people can create real-time to values without having to physically do that, which will then hopefully help solve some of the challenges around data accuracy and consistency to inform the output. So I think I'll pause there for a second for the rest of the team.
Okay, anybody else like to make a comment?
I'm not surprised to see machine learning being central. We saw it first with structured data, where because of the iterative nature and the very way machine learning approaches the model building process, you're able to use a lot more granular data than you could with traditional linear approaches and statistical correlation approaches. Some of the data sets that, for example, we have has extremely granular detail, which was really hard to incorporate and find how to build that into a traditional quant models. But machine learning can quickly determine if there's information because it's enabled quants and data scientists to find signals where humans couldn't. So that granularity, but also it enables the natural language processing and the text that's out there to create these uncorrelated signals, these new insights. Because quants have been around for 30, 40 years, a lot of the traditional data has been heavily mined. And I think that's the new frontier. And machine learning and the great strides in natural language processing have really enabled very strong signals to be extracted from text, and not only for the leading indicators that was referred to before, but also for finding totally new types of signals.
Okay, that's great. Thank you very much indeed, both. And let's move on and coming back to you, and then perhaps you could talk to some of the pitfalls that tech and data leaders should be aware of. We've talked about the desire for real time, about the use of the data not in real time. What are other things can maybe go wrong, or should people avoid?
So I think data and technology leaders have to understand that they are now very much a part of the business. That they're not a separate offshoot. They're not an internal operational mechanism. They are just as much, if not the heartbeat of what the business is today. And what underpins that is ironically, technologically speaking, there's no silver bullet and there's no singular thing that they can do that will change everything. It's really a thousand little things that have to happen to enable a business to really effectively move data from commoditized tool into asset and really enable that factor to come to life. So when you're looking at the pitfalls, technology and data leaders effectively have to unlearn what they've learned for the last 20 to 30 years. Technology cannot be a monolith. Data cannot exist in a singular Kimball warehouse, no matter how much we might have loved the data warehouse toolkit when it was written. It doesn't work anymore at the speed that data and the business enablement needs to happen. So in the same vein that they must kind of unlearn some of the legacy rules, it needs to be understanding that the modernization of a technology architecture is less about technology and it's more about the process and people elements within the technology. So establishing governance and establishing an operating model that supports data and analytics as a product to be used is a fundamental shift that more often than not creates that friction and pitfall a lot of people fall into. Buzzwords, consumer tech, will all fuel ideas. How do you bring those ideas to life in an enterprise fashion? That is the push-pull that a lot of leaders face today because of the lack of trust in data, because the speed the market needs to move. How do you balance all of that out? So I think what it boils down to is the understanding that the process of and the people needing to use data analytics and the technology surrounding it do not have a governed process today. And that ignoring that is the biggest gap in modernization and transformation ultimately becoming successful. That is the underpinning of quality. That is the enablement for machine learning to work at scale. That is the fundamental principle for modernization today, and that is incorporating process into the technology.
Okay, thank you. A touch on culture there as well. I felt that everybody's got to be with it and on the same side.
And you can extend that to an organizational question. We're seeing quantitative and data science applications being embraced by more discretionary investment firms and trading firms. And a lot of our clients are struggling with what's the best organizational structure for that. Should it be a centralized team, a resource that various departments could use, the fixed income, the equity, the traders, the risk departments, or should these quantitative and data scientist teams be embedded within each of those teams? Mm-hmm. And so that has to be determined. I think that's a big challenge. And there's an inherent, not conflict, but different perspectives where the data scientists are wanting to do really interesting things, but sometimes the end users, if you will, want some very practical things done that they're doing day to day, the BAU, to be improved through data science versus new stuff. So there's a lot of challenges with embracing data science and incorporating it into the more traditional workflows.
Okay, James, what would you say there in terms of take care
Sorry.
of? That's fine.
Sorry about that. Yeah. So I think a lot of great things were touched on, but I think organizationship, it's really just the ability to actually put in place a change management exercise and implement it. Because really all of this is truly a change management exercise that, especially say at the major banks who have significant technology debt, legacy architectures, all the siloed data challenges, they are sometimes the most data hungry and they want to gain the most insights and have the most at risk, both from a regulatory and a client perspective. But they have the most to gain from a commercial standpoint by doing it right. After years of getting eroded by fintech firms who have done things better, faster, quicker with a better user experience, you now have the model turn on its head where you potentially could see, the traditional larger banks have the time and the ability and the spend to change their technology to create a better user experience. And I think back to the change management exercise, and these were, after both the other speakers were talking here, some notes I wrote down was the one thing I think that the pitfalls that tech and data leaders have to be careful of is chasing rainbows, right? Innovation labs for the sake of innovation labs is great. But as we've seen again, people are going to be tasked on net profitability. We're going to be tasked with, typically that means reinforcing your competitive moat around things that impact clients today, right? Whether it's a better customer experience, shrinking the time of delivery for a loan to a much shorter window, and providing a simpler, easier user experience is going to help obviously either more established providers or people expand their businesses in ways they haven't done before. So again, great tech does not always equal commercial outcomes. And I think that math and that process has to be handled.
Okay, that's great. Or as everybody says, what's the object of doing all this? Great to do it, but what's the end game? Absolutely. Okay, let's take a break and take some audience questions, as I do have some now. And let me come back to you, James, if I may, with the first question. And it asks, modernization and getting more out of data is our plan. Where's the best place to start in an organization with a lot of legacy systems and apps?
Right. So I'll keep this generic, right? This is not exactly so quant specific, but uniformly, and again, across banking and capital markets firms, everyone universally likely should be starting with unifying their account information, right? Typically legacy systems, either homegrown or outside CRMs, you don't have that unified picture of your customer or your client, right? So whether it's institutional 360, customer 360, client 360, break out whatever line of business 360 you want. Do you truly understand your client and have a holistic view how you're engaging that client today, whether it's a straight revenue, connectivity standpoint, and the cost of servicing that client today? That is a great place to start. Again, modernization is great, but for what purpose? This is 100% likely the most significant use case I'm seeing across our financial services landscape today.
Okay, thank you very much indeed. And Rich, one for you. It says, how can we get data vendors on board to support this kind of change?
Well, I mean, it's obviously in our interest to make sure we're at least ahead or with the client as they go through this journey. So we try to have as open a dialogue as possible with our clients to understand what their pain points are. I think just starts off with good communication with your vendors. Too often, it's not seen as a partnership. And I found that not only from our perspective, clearly as a vendor, but also from the client's perspective, the best relationships are the ones where it's a two-way communication street. We work with our clients to understand what we should be doing next with our data, which is why we ended up on Snowflake with all of our key data sets. It wasn't intuitive to us because we had cloud solutions before, that this new environment a few years ago was crying for more data. So it starts with communication and making sure that the vendors understand what they're trying to do and can help them in their journey.
Okay, and one for you now. How do we win budget for this? Obviously, we've talked a lot about change, a lot about getting things better, quality, and all the rest of it. How do you win budget? What are the key benefits?
The best way to win a budget battle is going to be making things kind of outcome oriented. To Jimmy's point, it's not just doing things for the sake of doing them. It's about tying them to results, which is going to inherently get some shared budget action going on, because you're not just going to do it in a silo. You're going to do it with business sponsors who will support some sort of revenue or cost reduction outcome. I think part of it is also somewhat understanding the math, which is a funny thing to say to an audience full of quants. But from a budget standpoint, if you were a data or technology leader, more often than not, you've spent the last 20, 25 years working through perpetual licensing and trying to CapEx a lot of your spend. And how do you balance that CapEx and depreciation over 5 years against an outcome you hope happens, and tie that to execution? Understanding the budgetary differences of leveraging a consumption-based model and leaning into, instead of one giant project, 1,000 smaller ones. How do you operationalize that within an OpEx capability? How do you start building a bridge with finance to make sure there's, just like they are going to reforecast every month off of that plan, how do you do the same from a technical spend perspective to reallocate and be more fluid? That is ultimately that maturation process on the budgeting cycle. So starting with, building trust through outcome-based projects that get delivered, which sounds like a funny thing to have to call out, but actually successfully delivering something to production is a pitfall we kind of jumped over. But delivering something successfully goes a long way to actually building trust in the department. And then starting to turn that on its head, away from capital expenditure and long-range projects to shorter, more agile delivery points in more of a consumption base and operationalized, run rate.
Okay. We have a rather closely associated question. I think it may have no answer, but I'm going to still put it back to you, Anand. It says, what size of investment are we looking at here?
Well, as a consultant, my answer has got to be, it depends, right? I think what you'll see now is it's not the old model from a licensing standpoint. It's also not an old model from a services standpoint. I think if you think you have to buy the same coffee stained, PowerPoint printout that you've gotten in the past from, tax consultancies turned technology shops, those are multiple commas and you're getting solutions in a box. Similarly, you don't have to drop ship your work overseas and hope it gets done overnight the right way for hundreds of people for millions of dollars. I think when you're looking at things from a results standpoint and you're looking at that prioritization exercise, you can really get a better sense of how much do you want to do and how fast do you want to go, ultimately triggers what that number will be. And I think the beauty of a new model is that you can somewhat flatten that into a more predictable cost base. So if you say, I only have $1 million to spend, you could do a lot there. It's about prioritizing what the maximum is going to be that you can and need to get done for that amount. So again, I hate giving that consultative answer. It depends, but it really it's not depending on what I can do. It's not depending on what, you quote unquote want to do. It's how much can you spend and how do you prioritize the bang for said buck? That's the start point for that shift in exercise. Okay.
That's very helpful. Thank you. And back to you, James, with a question which we talked about a lot, and it is, what would the speakers suggest to resolve ongoing data quality issues in terms of, accuracy and consistency?
If I'm an intelligent person, which I hope I am, I bet you the person on this panel that can handle that the best would be Rich.
Okay, let's pass it over, Rich.
So the question specifically was, how do you go about ensuring the data is accurate?
Yeah, the question actually asks, what would the speakers suggest to resolve ongoing data quality issues?
Well, there's two types of data issues, right? There's the outlier issue and just having systematic ways to ensure that as you're receiving data, whether it's real time, daily, or whatever, that you're accounting for outliers and looking at anything that could be a data exception. And that could be a missing data point or something that's way outside the norm. Those are the easiest because those could be easily systematized and then identify potential flags for human review. The difficult ones are if you're using historical data, how do you ensure that there's not only no outliers or blatant data errors, but how do you ensure that there's no biases? And that gets trickier. One test is to make sure that you have, for example, all the constituents for your indices that you're benchmarked to. Quite often you see people having only 400 constituents for the S&P 500 at a point in time. Well, that's a signal that you have inherent survivorship bias. And forward-looking bias, just making sure that you're recognizing when data is not only reported as of, for example, if it's fourth quarter earnings, it's December 31st results, but when was it available historically, and making sure you're keeping track of that accurately.
Okay, tough place to start. Absolutely. And we have got some more, but let me come back to you, James, with one which I think you will be able to be the expert on. And it asks, talent is a problem. How do we find the right people to support a quant modernization program like this, or do we train in-house? What do you see out there in the market? Talent is a problem all over the place. What do you see here particularly?
Interesting. And I think for the first time in a long time, seeing the tech sector actually shed jobs potentially provides an opportunity for many firms to become the beneficiaries of that experience. I think it was continuously the other way around. The biggest and best tech companies of the world were the acquirers of all the talent in that sense. And I think the rationalization of some of the workforce and the rifts that have happened may have led a lot of high quality talent back out to the street. So I think given these challenges, I think people will have a bit of a better opportunity, a bigger pool from which to pull from. So I think, and I think the availability, given that the job market is changing, firms, such as Snowflake, and I've worked at Amazon, there is so much training that is available and certifications to show people that they have the skills to fill the jobs and the needs, obviously, of the new data economy and big data challenges, that hopefully the people who do have the motivation will be able to get themselves the skills to be acquired and picked up by the companies who need it the most.
Okay, that's a very positive note on that one. So thank you. Thank you to our audience for your questions, and indeed thank you to our speakers for their answers. Coming to our final question today, I'd like to ask all our speakers where they see the industry moving next in terms of quant research and trading. So Anand, please would you kick off here?
Yeah, thank you. So to borrow some of Jimmy's V's over here, but I think ultimately the industry is going to move towards more voluminous data, more volatility in the market. It's going to beg for a faster response. And I think when you saddle that up against an ongoing AI explosion, pending quantum processing because of cloud enablement, you're going to see quants ultimately look to push a lot of what I will say loosely minutia of their jobs into the chat GPTs of the world, so that they can actually focus more on the results of back and stress testing against faster engines, doing more hypotheticals and more multiversal analysis to figure out what's the right thread here. How do we do both? How do we maximize the alphas or find net new alphas without ever sacrificing just our baseline, beta index strategy? So enabling all of that capability with what we were talking about, governance, both of data, governance and process and change. That's where I see the industry ultimately moving for enablement and becoming, data the asset and technology is the business driver. Very kumbaya of sorts, but I think that is ultimately where it's headed as data continues to push that needle forward.
Okay, Rich, what do you see coming next?
Well, I think from a capabilities technology point of view, we're going to see a continuation of the trends that have been accelerating over the last year or so, which is embracing natural language processing. The advancements in textual analysis by computers is accelerating quickly and creating more accurate signals. So I see that continuing, and I see companies investing in that. And a continuation of an adoption of the cloud and bringing more data to be integrated into a single environment in the cloud. From a use case point of view, I think touching on the themes from James and Anand, it's focusing in on how best to risk mitigate and understanding what data can be useful in that exercise for staying ahead of potential risk events and looking for early signals. And then, in addition, there's the objective of incorporating macro signals into micro decisions on stocks. Often in the past, we looked at macro analysis as more asset allocation and things like that for global macroeconomists and strategists. But increasingly, I think it's going to be incorporated into security selection for alpha at the individual security selection level.
Okay, thank you. And James, from some last words from you, please.
Yeah, and I'll keep this thematic. I think Anand and Rich hit things very well on a specific level. I think as people engage in this process, right, people call it a journey. I hate the word, but at the end of the day, it is a process, right, to get from what stands today with the legacy tech debt to where they wish to go to handle all of this data. I think what has to be kept in mind are a few different points. Is really around, is what you're doing creating the operational simplification that you're looking to achieve, right? And with that, is it creating the performance that you're looking? Are you getting the time compression, right, that economically aligns with the productivity and the profitability that you need today, especially in a rising interest rate environment? And as people prioritize their workloads and as they prioritize their efforts, does it solve these three pieces? Is it helping you improve your risk management? Is it helping you, tying you to client retention and revenue outcomes? And is it helping you improve, net profitability, your top and bottom line? And I think many people are seeing that success. The question becomes is, how do they then heat map what they're looking to do against those priorities, which sets a good, hopefully a guiding light, which will mean, as Anand said, each client will have their own differentiation, right, to what they hope to achieve. But hopefully some of those thematics will help them steer their time and effort as they take on that process.
Thank you, James, and thank you to all our speakers for sharing their expertise and experience. Thank you to Snowflake for sponsoring today's webinar. Before we close, just a few A-Team Group items that may be of interest to you. You can sign up for our next Trading Tech briefing in New York on the 8th of June, or take a look at one of our new training sessions on market abuse fundamentals. Finally, you can register for A-Team Group's 30th of March 2023 Data Management Summit London. It's at America Square Conference Centre in London, and there'll be lots and lots of things to explore, learn, try, meet people, network, and all those good things that happen at conferences. You can see the details on your screen. I do hope that some of you will register, and I'll look forward to meeting you there. That said, that's it for today. So thank you again to Anand, James, and Rich, and thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we are always keen to hear your views and improve our products. Meantime, thanks again and goodbye.